Hi, everyone. This is Jason Burack of Wall Street for Main Street. Welcome back to another Wall Street for Main Street podcast interview. Today's special guest is a returning guest. I've known him for years. He is truly an oil and natural gas expert, also other forms of energy as well. He's been writing for Investing Daily. He has a paid investment research newsletter for years that is very successful, very popular over there. A number of oil and natural gas energy newsletters. I actually worked over there in the past with him. He also has been a writer for Forbes. He is a chemical engineer in the energy industry, and he has over 25 years of experience in international engineering for chemicals, oil and gas, and renewable energy. Robert Rapier, thank you for joining me again.
Thanks, Jason. Good to be here.
Now, Robert, oil is being mentioned constantly on the news, everywhere. News cycle, Russia, Ukraine, oil supplies. We have this narrative going around with President Biden begging potentially Venezuela for oil, begging potentially OPEC for more oil, begging potentially Iran for more oil. But a lot of people who are listening to this podcast, you and me included, would like to see the U.S. solve its own problems, grow its own oil production. So how quickly, in your opinion, can the U.S. grow its oil production to help knock oil prices back down?
Okay, so let me first say that this is the most interest I've seen in the energy sector since the price spike of 2008. Even when prices collapsed in 2014, there wasn't this level of interest. People, when prices go up, they want to know what's happening. And so, what happened over the past couple of years, when COVID crushed demand, supply followed, and a lot of oil producers went out of business, and a lot of people left the oil industry. And so, in a very short period of time, we lost more than 3 million barrels a day of production. And then when the economy started coming back, production lagged. So we saw demand return back to normal fairly quickly, but supply significantly lagged. Now, why is that? In fact, we're still about 1.4 million barrels a day below the levels we were just before COVID, but demand is back to where it was. So what's going on? Well, one thing is, we shut in some oil production. We shut in some small stripper wells. Some of the producers went bankrupt. We now have manpower shortages. There's fracking sand shortages. So there are logistical challenges. So you probably heard the administration say, well, the oil companies are sitting on 9,000 permits. Ask them why they're not producing more. It's not as simple as that. They did stockpile permits ahead of Biden coming into office because there was a fear that he was going to shut down drilling. And so they did, in fact, stockpile, but they're working their way through that stockpile. So, what I've said lately is instead of throwing barbs at the oil industry, I agree with you. Before we go down to Venezuela hat in hand or go over to, other countries and like Saudi Arabia and ask them to produce more oil, I don't understand why we're not inviting the, CEOs of the 10 largest oil companies up to the White House for a summit. Just so I think the White House does not understand the issues very well. And I don't know if it's that or they just prefer to blame the oil industry for, the shortfall or the price spikes. But I think it would be far more productive to get them up there and say, look, guys, what's it going to take? One of the issues is that, oil companies have lost money in 4 out of the last 10 years. And so investors have demanded more capital discipline from them. And so, they're looking at oil prices right now and they're saying, well, this is not where oil prices are going to settle out. We're not going to suddenly invest more money based on $100 oil because we don't believe that's where it's going to settle out here over the next year or two. We believe there'll be a pullback. So, they're looking into their crystal ball, which, is not perfect. And they're making decisions based on that. And, it's just not as simple as just turning on a spigot. They have managed to raise oil production a little bit. And that's, some of these permits, are producing oil at this point. And drilling is, the number of rigs drilling for oil is up 60% in the last year. So there is activity going on. And it's wrong to point the finger at the oil industry and say, well, ask them why they're not drilling. There needs to be a better understanding from the White House on these issues, and at the very least, the optics of going to Venezuela before you have a powwow with the U.S. oil industry are terrible.
Yeah, I agree. I think we have the best private sector oil and natural gas companies in the entire world. And yet the Biden administration, I think, in my opinion, that they are anti-oil and that the narrative has changed because of polling, because gas prices are so high, because inflation is going to affect the November elections and gas prices are going to affect the November elections, that they've done kind of a 180 with the public narrative. So the narrative now is they're going to try to, quote unquote, fix the gasoline problem. But as you mentioned a couple of minutes ago, they're not really doing the smart solutions. We've talked in the past, in past interviews in the archives over the last couple of years, about problems with Venezuelan oil production. Venezuela was producing, I believe, if I remember correctly from our interviews a couple of years ago, I think 4 million barrels per day around 2007, but their oil production has been in permanent decline since then. And I think in 2019, before the pandemic, I think Venezuelan oil production had gotten to barely 1 million barrels per day, if I remember one of your articles from 2019 correctly.
Yeah, it was in free fall. They have on paper the largest oil reserves in the world. The reason for that is they have tremendous oil reserves in their heavy oil sands down there. There's a lot of oil that could be produced, but it's costlier to produce, and it takes very big investments. And Venezuela's history of expropriating foreign investments. You get a company in there. I worked for ConocoPhillips when Chavez expropriated our investments. We have sunk a lot of money into Venezuela, and when it started to pay off, he said, "Hey, I'll take that." Now you can't. Companies aren't going to come in and invest in that kind of climate, and so Venezuela's oil production. You had all the Western expertise leave, and their oil production just was in free fall, and it's just declined and declined and declined. Over a longer period of time, and with some major investments, they could probably reverse that decline for a while. But I don't know who's going to be willing to do that.
So it sounds like the Biden administration, that was a political narrative for an excuse for the oil price to crash, whereas in reality, the U.S. is not going to get 500,000 barrels per day or 1 million barrels per day from Venezuela. They don't have that. And if they did, the Chinese have claim on it. You're talking about who would invest in Venezuelan oil production. The only obvious one I see is the Chinese.
Yeah, and they will, and they have. China invests everywhere. They have no regard for human rights issues or corruption, or they will put money in any country that they think can give them oil. And that's one reason that a moratorium on or banning Russian oil imports isn't going to really disrupt Russia's ability to make money off their oil, because China's going to step up and buy it, and so will India, and there's lots of countries that will do that. So there's a temporary disruption here, but I think things will settle down. I mean, when oil spiked to $130 earlier in the week, people were asking me about it. I said it'll settle back down here, because oil is fungible. The supplies, the flows are going to get rerouted around the world. You're going to have Gulf Coast refineries that were using Russia's oil. They're going to have to scramble and find replacements. And then Russia is going to have to scramble and find new homes for that oil. But it's going to all settle out. And it's not going to be as efficient. And so there is going to be, a price increase as a result of our decision not to import any more Russian oil. But oil's not going to go to $150 or $200 a barrel over that decision. It's going to take knocking off some Russian oil production or a serious cut into Russia's ability to export their oil before we would see a run to 150 or 200. Now, if Russian oil production got completely knocked offline, taken off the market, $200 oil is not out of the question.
And how quickly, in your opinion, do you think that domestic U.S. oil production can ramp up to replace Russian oil production? So to get to that 500,000, 600,000, 700,000 barrels per day, replace that number that was being imported from Russia, how quickly would it take the private sector here in the U.S. to ramp that up? Because it's not going to take weeks, it's going to take months.
Yeah, I was going to say a year. I mean, we've ramped up at that pace before. We've ramped up at a pace of 1 million barrels a day per year, but not shortly after the industry lost, hemorrhaged money 2 years ago in 2020. And so they're being a little bit more careful. I think if their outlook was, it's going to be $100 a barrel of oil as far as the eye can see, I think they'd be a lot more aggressive and they'd be out drilling and investing more money, and you'd see a faster ramp up. But, they've gotten burned so many times. Big oil lost $76 billion in 2020. And so when people say, oh my gosh, look, big oil is profiting right now because oil prices are skyrocketing, I say, do you remember what happened 2 years ago? I mean, that is the nature of oil. It's they gain money, they lose money, they make money and they lose money over and over again. And so, whenever they make money, you start hearing the calls to punish them. And by the way, I just looked up the numbers. So Venezuelan oil production did fall below 1 million barrels a day in 2019, and it was 540,000 in 2020. 540,000 barrels a day.
Is it back up to a higher number now, or is it?
We don't have 2021 numbers yet, but it probably bounced up because pretty much everybody's oil production got hit in 2020. But I doubt that they're back up to 1 million barrels a day.
But that's still permanent decline, though. And I would argue they need tens of billions, if not maybe over $100 billion worth of investment to get oil production back to 2 million barrels per day, 3 million barrels per day. And I don't see anyone other than the Chinese, if the Chinese decide they want to send in the military to protect their investment, wanting to invest that type of capital into their oil sector.
Yep, absolutely agree. It will take a very large investment.
So I want to talk about government hindering problems then with the U.S. oil sector. So you talked about the permits, but what the Biden administration didn't say, and I've heard this a lot, and I've heard other oil experts talk about this, is that there was almost 40,000 permits for U.S. oil production and natural gas production prior to the Biden administration taking over in January 2021. So yes, 9,000 permits, give or take, does sound like a lot, but it's also been cut by around 70%.
Yeah. So, funny thing, when Biden came into office, they did a lot of foot dragging on permits, and they, put moratoriums on drilling in certain places, and they shut down the Keystone XL pipeline. So these were all decisions that were not good for the long-term outlook of the oil industry. And so as oil prices continue to rise and gasoline prices continue to rise, I think they recognize the optics of how that looked. And so by the summer of 2021, Biden's first year in office, I read an article that they were actually approving permits at a faster pace than under Trump. And they were trying to catch up. They dragged their feet, and so they were paying a price, and they were scrambling to catch up. But, that foot dragging in the beginning, really caused a problem. And, the optics of all of this, I've told people before, gas prices didn't spike because of the cancellation of the Keystone XL pipeline. But a few years from now, we may very well say, yes, gas prices are higher because there is no Keystone XL pipeline. But what it did do, it immediately provided the optics that, Biden shut down the Keystone XL pipeline, and now look where oil and gasoline prices are. So for a lot of people who don't dig very deep, it's a simple correlation. And politically, again, the optics of this were really bad. It was a bad strategic decision, but it was a bad political decision as well.
I would say that gasoline prices are high. Number one, the market's worried about some supply concerns, but also because U.S. oil demand has returned pretty close to 2019 levels. So we're back to pre-pandemic levels. I pulled up some data here from someone else, from an investment bank, from UBS. U.S. oil products total consumption was up 14% year over year, with gasoline, jet fuel up 3% and 59% year over year, respectively. 4-week average basis, the total demand was up 12% year over year. And we're just heading into summer driving season, although with a higher gasoline price, maybe people are going to carpool, but people will still drive probably versus flying, especially considering like the extra surcharges that are going to be coming with airline tickets.
Yeah, right. I mean, those are coming. I mean, I don't see this settling out really soon. I mean, it depends a lot on what happens in Ukraine. There are several elements of this oil price spike. The first element you mentioned is the vast majority of it, but we had still settled out about $70 or $80 a barrel prior to Russia going into Ukraine, and that then made the market very nervous. There's not a lot of spare capacity in the world. And then, I wrote an article for Forbes last year about who's to blame for rising gas prices. And that was my most popular Forbes article ever. It got more than 1 million views. And I'm about to revisit that because at the time I said Biden doesn't bear a lot of responsibility for it. But at this point, I'm going to say now he does bear responsibility for deciding not to import Russian oil. Now, I'm not going to say that's the wrong decision, but I'm going to say it is a decision that we can say, okay, it's based on something Putin did, but it is a decision that put another premium on gasoline prices. So at this point, I can say, okay, Biden has done something now that did increase gasoline prices for certain. Most of it's bouncing back from COVID, but that decision has added to gasoline prices.
So you think that OPEC does not have spare capacity because they were promising to increase oil production over the summer in 2021. And 4 or 5, 6 months later, when we were looking at the data, the oil production increases did not occur like OPEC said they would.
Correct. They've been underproducing their quotas. And that's unusual when oil prices are as high as they are. I think a lot of the issues that affected U.S. oil producers, I think they affected, other countries as well. There are, some supply constraints, I think, coming out of Saudi Arabia. They may have a little spare capacity, but I don't think it's, what the world thinks it is. And I read into the fact that they are underproducing their quotas. I read something into that, especially at these kind of prices. I mean, they've got every incentive to produce more and make money right now, but they're underproducing even as prices creep higher and higher and higher.
Well, normally though, with oil companies, and maybe the average person listening to this doesn't understand the oil business or commodities businesses like mining, you have to normally make large investments in order to grow production substantially. So that's why a lot of these national oil companies that are in OPEC or OPEC plus, this is why they cannot consistently grow production. These are not efficiently run businesses where the governments are reinvesting a lot of their oil profits back into the oil business. These governments, a lot of the revenues and profits that come from the oil companies and natural gas companies, they're being used to balance the budget for the government. They're being used for social spending. The oil profits are also, in many cases, whether it's Brazil with all those scandals with the Brazilian presidents, Venezuela, Nigeria with the stories of briefcases or duffel bags and oil cash being stolen and taken to foreign bank accounts, a lot of that oil money is stolen too from these governments and national oil companies as well.
Right. And the best example of that is Venezuela, I think. So I used to say that Chavez was killing the goose that laid the golden eggs. When the oil companies started to make a lot of money there, he started to take all of that money and put it back in social programs. There's a sustainable amount that he could have siphoned off and supported the social programs, but he overdid it and he didn't allow them to reinvest. The oil companies, very capital intensive businesses, and he siphoned off way too much, more so than they could not invest back into maintaining production. And I don't know if he didn't understand that or, but
I don't think sorry to interrupt you, but from speaking with half a dozen friends who grew up in Venezuela, I don't think he cared. I think he just wanted to steal as much as he could and get rich quick. And that his friends in the military and his cronies, they just wanted to steal as much as they could and take their wealth and buy real estate in Miami and set up their kids with trust funds and foreign bank accounts.
Yeah, and I think that's what some American politicians don't understand. When oil companies have these windfall profits, they're doing several things with them. They're making new investments back into the business. They're paying out dividends to shareholders or buying back stock. And for some reason, those things, these people have spent years trying to get places to divest their oil company shares, and now they want to dictate how these companies spend their money. And that's kind of funny to me. Oil companies can buy back shares. There's nothing wrong with that. If they can issue shares, then they should be able to buy back shares. If they believe their cash is better spent buying back their shares, if they think their company is undervalued, there's nothing wrong with that. And you hear that used like it's some kind of evil thing, or paying dividends, like oh, they're using that money to pay dividends. Well, what's wrong with that? There's people invest in these companies for dividends, just like they invest in Walmart for dividends, invest in, other companies for dividends.
And a lot of these oil companies are not consistently profitable. Chevron had their best year in 2021, their best year since 2014. But earnings growth for a lot of these other oil companies is very inconsistent. Unless you're a low-cost producer and you're running a clean balance sheet, a lot of these shale oil producers were using cheap equity and cheap debt, junk bond debt, to grow production. They were growing it very inefficiently. They were not growing it with free cash flow and reinvesting profits back into the business.
Right. There's been a lot of irresponsible spending, and banks and investors have said enough. They're finally making a little money now, and as soon as they start making money, you've got calls to for windfall profits taxes and basically punitive measures on the oil industry when the industry as a whole is finally making money.
Exactly. And the industry needs to reinvest that profit and free cash flow into CapEx, into finding more oil, replacing reserves and growing production for oil and natural gas. And putting punitive windfall profits taxes will not only will it inhibit that, it will kneecap it. It will totally handicap it.
Yeah, I mean, you just look back to Venezuela and you say, if you siphon too much out of a company that's making a lot of money or out of an industry that's making a lot of money, look to Venezuela. That's what happens.
So in your opinion, does the U.S. have the best ability of any country right now to grow its oil production quickly and efficiently?
Yes. I mean, Saudi may be sitting on a little bit of, that may be one country that can bump up production a little bit. Outside of that, the U.S. probably, and Canada. Canada has some spare, some ability to grow. I mean, it would have been nice to have the Keystone XL pipeline, being built so that, we've got even better transportation from a good source of supply to the north. But yeah, I think you're right. I think probably it's the U.S. and the only country that might be able to just turn on the taps a little bit more is Saudi Arabia, but there's just not a lot of spare capacity out there right now.
So you think then 6 to 8 months, a year from now, between 6 and 12 months, that the U.S. can increase oil substantially, but gasoline prices in that meantime, they're not going to go down then?
No, we're going to be playing catch up for a while. I do think that once things settle out, and it depends on how, if Putin suddenly pulled back to Russia out of Ukraine, I think we'd see oil prices retreat back to below $100 and gasoline prices would pull back. But for a while, for now, with the way things are, I think we're going to be playing catch up. We're going to be trying to produce as much oil as we can, and that's going to slowly increase over time. We're still working against depletion. I did see an article today that talked about all the permits that have been issued. It said, between 2015 and I think 2020, they produced, about 2 million barrels of new oil, but then depletion was greater than that over that time frame. So, the new permits were just enough to keep up with depletion, or maybe not even quite keep up with depletion. So there's that factor as well. I mean, you're working against depletion.
And we're also heading into summer driving season. And normally the refiners start to increase prices substantially because they change the blends and they have to change over, and there's extra cost for that.
Yeah, and that's happening right now. Over the next 2 months, they'll be going from the winter blend to summer blend. Summer blends can use very little butane. Butane is cheap and plentiful. And so what happens is the summer blends are more expensive to produce, and the supplies are more limited. So you got greater supplies in the winter just because the butane can go into the gasoline at a lot higher level. So yes, that's, summer blends are more expensive and supplies are skinnier than they are in the winter.
We're recording this interview on Friday, March 11th, 2022. WTI crude prices are a little above $109 a barrel. Brent crude's a little bit above $112 a barrel. I want to ask you about deep water. That sector is unloved. It is hated. I was doing research on some deep water companies. One of them went bankrupt twice in the last 4 or 5 years, and I think they're going to re-IPO in the next couple months. We have also Diamond Offshore Drilling, which went bankrupt in 2021. The only survivor right now, the only large one, is Transocean. Do you think that deep water drillers will be consistently profitable now going forward in the next 6, 12, 18 months, as long as oil prices don't crash?
They will be profitable at this oil price. But the problem is, those projects take a long time to complete. And so as long as we've got oil prices oscillating up and down, you're going to be knocking those guys out every once in a while, just like it's happened in the last few years. If we had a consistent high oil price, $100 a barrel or something, those guys would be profitable. You'd see a lot of growth there. But investors are scared. Investors are scared of oil prices running back down to $60 or $70 a barrel and just knocking these guys out.
If OPEC doesn't have spare capacity, and we laid out the case that it's going to be difficult for most OPEC countries to increase oil production, if they do increase oil production, I think the Chinese have claims on it already. I think that is what has changed compared to the last oil bull market that we had in 2007, 2008, where oil prices got this high, gasoline prices this high. The Chinese have claims. They have long-term contracts, supply contracts with pretty much all of these OPEC Plus and emerging market oil producers like Ecuador. And they did not have that in the last oil price cycle, 2007, 2008. They were just starting to do that. Here we are 13, 14 years later. The Chinese have a lot of contracts, oil contracts with all these different oil producing countries now.
Yeah, and Chinese consumption, I'm just looking at the numbers here. China was consuming below 8,000 barrels a day back in 2008. Today, it's over 14. So that's true. They're consuming a lot more oil. They've got contracts for a lot more oil. So that is a dynamic that's different. Chinese demand, U.S. demand hasn't substantially increased since then, but Chinese demand is about 6 million barrels a day higher than it was the last time we had these price spikes.
So that brings me back to the topic we were discussing only a couple minutes ago with Deepwater, that I'm looking at the only potential sources of oil production increase on the supply side. You have U.S. shale oil production, which is going to be very capital intensive. And then you also have Deepwater in the Gulf of Mexico with U.S. oil producers again, and that is also capital intensive. And those to me look like two of the main sources of oil production increases globally, unless there's another country that can do it. Robert, maybe you know better than I do.
Well, oil sands could, but they're somewhat transportation limited. They've got logistical challenges in getting that oil out of there. And that's, again, where Keystone XL would have helped. I see these memes going around. Keystone XL wouldn't have produced a barrel of oil. No, it would have enabled the production of barrels of oil, because those barrels aren't being produced right now because they have no easy way out. So, Canada could ramp up production some there. They've got a very large reserve of oil sands, but it's trapped. It's distressed.
The other part of that equation is also, I'm not sure Trudeau would allow it at this point. Even though it would help their economy, I'm not sure he would allow it.
Yeah, I don't know. He seems to be, Canada seems to be a little bit more realistic. We seem to be the only country that has a large segment of the population that hates the oil industry. I've spent a lot of time in Canada. I don't get that from them. And I think, when Keystone XL was being discussed, Trudeau was not happy about it being shut down. He lobbied hard for it to be, for it to be built. And so, I don't know. He realizes the importance of oil to Canada. It's major income source for the country, and I think he's okay with their oil production.
So I want to ask you now about some of the larger and lower cost oil producers in the U.S. like Chevron and EOG Resources, which have been outstanding stocks the last 2 years. Do you think that larger U.S. oil and natural gas producers like Chevron and EOG will be looking to make U.S.-based acquisitions now, considering geopolitical risk in other countries, and increase oil and natural gas reserves here in the U.S.?
Yeah, that's one of the other things they do when they've got a lot of free cash. They start looking around to see who can we buy up. And I would add ConocoPhillips to the ones you just mentioned. I own shares of ConocoPhillips for more than 20 years, but I was always selling calls on them, and they got called away this last time because oil prices are just rising so quickly that the share price just really took off. And another one that, I've avoided ExxonMobil for many years, but, I run these stock screens every week that look at a lot of different factors. And for the first time, ExxonMobil popped up high on my stock screen. And I think it's because it has basically underperformed a lot of its peers. And, it's just showing up as relatively undervalued compared to a Chevron, which has been a recommendation of mine for utility forecaster for a long time. It's been one of our best buys for a long time. And subscribers have done extremely well on Chevron. But Chevron has run away from ExxonMobil, and Chevron has outperformed ExxonMobil for many years. But finally, ExxonMobil, popped up on my radar. So that might be worth looking at. But, yeah, I think you're right. I think they will be looking around. They will be looking around for where to spend some of this money.
ConocoPhillips, correct me if I'm wrong on this, didn't they already they bought Concho, I think, in late 2020 or early 2021. Yes. And they bought the assets pretty cheap back then. And then I think also that Pioneer Natural Resources, he bought his son's company, he bought Parsley Energy. So those were pretty astute acquisitions of cheaper assets back then.
Yeah, there was a time that the market was punishing oil companies for making acquisitions. I know when Oxy bought Anadarko, they got punished severely for that. And Chevron walked away with a $1 billion consolation prize in there. I was writing articles at the time saying, Chevron, please do not get in a bidding war with Occidental. And they didn't. And Occidental got just pummeled. Now, they've recovered since. And Warren Buffett came into the rescue and got a really sweet deal. But Occidental came up just like everybody else. It looked like they were on the verge of bankruptcy at one point. I mean, their enterprise value at one point was less than the combined enterprise values of the companies before the acquisition. But, they've come bouncing back. But now the opposite is true. Recently, companies that have made smart acquisitions have gotten rewarded. And ConocoPhillips has gotten well rewarded.
Well, Occidental Petroleum used way too much debt back then. So that was the issue. So yet they had too much debt, and then they had a falling oil price. So that's why the stock was punished.
Much. I mean, they paid too much. Chevron saw what they were willing to pay, and they said, we're out.
Well, maybe Occidental Petroleum pays off a lot of their debt, and then maybe Chevron or one of these other well-capitalized oil companies comes in and buys them.
Yeah.
But Chevron has been more disciplined, I would say, about capital investment. The other company is EOG Resources. I think that's probably the most efficiently run U.S. oil and natural gas mid-tier independent. It's just well known throughout the industry that the management team is just very cautious about overspending on a lot of different items.
Yeah, I've owned shares of EOG for a while too. They also got called away, but I have owned shares of EOG, and I agree. I put the two best oil and gas producers as ConocoPhillips and EOG. I tell people that if you're going to own just a couple and you're going to keep them for a long time, those are the ones.
Well, I want to ask you actually about natural gas. So do you think that natural gas has even better long-term supply and demand fundamentals than oil does right now?
Well, yeah, especially if Europe is going to try to replace Russian gas. I mean, that's a pretty attractive looking market for the U.S. There's some logistical problems in getting that in there. They don't have enough import terminals in all the right places, but natural gas has been a booming business, and it will continue to be. There were years where natural gas producers weren't making any money. I owned natural gas producers when they were getting pummeled. And but that's turned around, and now they're starting to make some decent money. And yeah, the market looks pretty good.
Well, shockingly, global electricity demand grew by 6% in 2021, and that was despite the pandemic, despite so many businesses being forced to be shut down by governments in different countries. China had a bunch of factories shut down, and global electricity demand still grew enormously in 2021. And I think natural gas is becoming a larger share for these electrical utility power plants. They're switching away from coal. You're seeing in the European Union, you're seeing more nuclear power plants shut down, which I don't think is smart, but they have to find the supply for the electricity somewhere. And I think natural gas fills that void.
Yeah, and I agree with you. Shutting down nuclear power plants is not good. I don't know why Germany insists on continuing down that road when that would help them get off of Russian gas, and I just don't understand why. At least for now, they say, okay, well, for now we're gonna hold up a little bit until we have more secure replacements for Russian gas.
And U.S. liquefied natural gas companies, and there's only a couple of pure plays. Cheniere Energy is the largest one, the main one. I remember, since I've been in stocks for so long now, almost 15 years. I remember when Cheniere Energy was under $5 in 2008, 2009, and people were talking about how risky it was going to go bankrupt. Here we are. The stock, I think, is over $120 a share now, and they have long-term contracts to export liquefied natural gas all over the world, enormous amounts of profits. They're booked solidly, I think, through the 2040s.
Yeah, they're an incredible story. They started out they were going to import natural gas. It looked like U.S. natural gas, was in decline. I remember when Matthew Simmons said there is absolutely nothing that can be done to avoid the fact that the U.S. is going to have to need more and more imported natural gas. And then fracking came along, and that was turned on its head. And Cheniere then, started converting those natural gas import terminals to export terminals. It was a very, very good move, and with the rise of fracked gas, that has paid off extremely well for them.
Oh, they're minting money right now. Their earnings per share, they're increasing dividends, and they have these long-term contracts, so they're not subject to the fluctuations in the natural gas price. They have solid long-term contracts with these foreign oil and natural gas companies, foreign utilities, so they know that they have profits. They just have to make sure their business runs efficiently.
Yep.
Okay, as we wrap up the interview here, I want to ask you now about uranium. So it looks like potentially we have a supply crunch coming for uranium. We have other countries outside the European Union that are starting to build more nuclear power plants. I know you wrote an article on nuclear power in the last month or so. Are you bullish on uranium producers and nuclear power companies long-term?
It's hard to say. Technically, as an engineer, it makes the most sense. I mean, as an engineer, if you're trying to design a solution to a problem, nuclear power is right up there at the top. But then you've got the pushback from the people and the fear from the people, and so it's a tough one. Just as a purely technical solution, I would be very bullish on nuclear power. And I think that China, where they don't have to worry about whether the people are for it or against it, China can do what they want. And so they're going to be putting in nuclear power plants. And so I think we will see decent growth in nuclear power, but I think it's going to be mostly in Asia Pacific. And I don't see a lot here in the U.S. There's a couple of reactors being constructed right now. But then after that, I don't see anything. It's hard to be bullish about nuclear power. I'm technically bullish about nuclear power, but as an investment, I'm a lot more ambivalent just because, I don't see a lot happening in the West there.
So you're worried about the demand side then, if the nuclear power plants are actually going to get built to use the nuclear fuel rods then?
Right. I mean, I think there'll be plenty of demand in China. There will be significant demand from China. I mean, I think that's where most of the new plants are being built. And I think as they continue to electrify and people continue to move into the middle class over there, China's going to build a lot of nuclear plants. And they still use half the world's coal. So there's a lot of coal consumption there that they can displace with nuclear power.
I think Japan is actually planning on restarting their nuclear power because of how high the liquefied natural gas price is, U.S. natural gas, in order for them to get imported LNG and other sources for their electrical utility plants, I think out of price concerns, because if I remember correctly, in the last month or so, I think I saw that the Japanese government was having to subsidize gasoline prices for its citizens. So if imports are that expensive in Japan, I think they're going to have to turn back to nuclear power. They might not have a choice financially.
Yeah, I agree. And I think that's correct. I think they have started up some of their nuclear plants.
But you highlighted in your nuclear power article an important key point, how difficult it is for environmental approval, permitting, just to build one or two nuclear power plants, new ones here in the United States. It's very, very difficult, takes tens of millions of dollars in permits and many, many years before you can even get construction approval. And then construction takes many years as well. So it's basically, I would say it's almost a nightmare just to get a couple nuclear power plants built in the US now.
Yeah, unless you had a strong push at the federal government level that extended across, multiple administrations, I don't see a big growth trajectory here in the U.S. for nuclear power. I think we've been flat for a long time, and I think we'll continue to be flat.
And I think a lot of that is not only politicians, but also the Department of Energy is largely, a lot of their scientists are anti-nuclear. There are not a lot of people at the Department of Energy that are permanent employees there that are pro-nuclear power. You just don't see it. You see them talking about biofuels, wind, solar. You see them talking about other types of green energy and not consistently nuclear power.
Yeah, if you do the math, though, and you say, what's it going to take for us to, if we want to eliminate our carbon emissions, you quickly conclude nuclear power has to be part of the solution, or you can't get there. And I know people who have sort of been anti-nuclear that just did the math and they came to that conclusion. They said, well, we got to have nuclear power. If we're really serious about getting carbon emissions down, nuclear power has to be part of the solution.
I agree. Nuclear power is by far the most energy dense. So from a science standpoint, looking at energy density, efficiency, with generating electricity, nuclear power is the most efficient. However, the risks are potential, nuclear power meltdowns, and just to build a nuclear power plant is very expensive and time consuming. So you can't build them efficiently. I would love to see the US government allow the private sector here in the United States, these large utility companies, to invest millions of dollars in research and development and come up with more efficient, smaller, advanced next generation nuclear power plants like the liquid fluoride molten salt thorium reactor. We could start building test plants now, and 10, 15 years later, we might have small, cheap ones that we can make for $50 million or $100 million that can provide electricity for a city. But those types of investments in new technology are being blocked.
Yeah, you've got to see a push from it at the federal level, I think, before we're going to see a lot of movement there.
As we wrap up the interview, I want to get your opinion on potentially some undervalued oil and natural gas stocks. So we've seen big moves in some of these oil and natural gas companies. Are there any ones you see that are still pretty good value where the earnings are starting to improve and the market hasn't recognized it yet?
Well, the one that popped up for me, like I said earlier, was ExxonMobil. That hasn't been on my radar in a long time, and I think Chevron has outperformed them for a very long time. So Exxon popped up on my radar. Eni, the Italian company, they popped up on my radar. There are a few that have lagged a little bit. It's hard to find value now. I mean, the sector is very hot. If oil prices pull back, even I think ExxonMobil may be relatively more of a value, but if oil prices pull back, it's gonna tumble like the rest of them. The one sector that always seems to lag is midstream, and a lot of the midstream companies have come up, but they have lagged quite a bit. And one reason is they're not as directly tied to oil prices. But I think there's value there. There's value that can be found. Enterprise Products Partners, I own that, and I think it's a good value. I recommended Kinder Morgan a while back. It's now gone over the strike price, so we're probably going to have to roll that one. But we've made a decent profit on that one. Magellan Midstream is another one that it's kind of underperformed for years, and it's really it's a good value, pays a very high yield, but its unit price just hasn't gone anywhere.
And for our listeners that don't understand upstream, midstream, downstream, midstream is the pipeline companies.
Right. Pipeline is storage. Upstream is where they produce the oil. Midstream is where they store it and move it, oil and gas. And then downstream is where they refine it and sell it.
And the refiners, in your opinion, do you think the refiners are going to do okay? Or are they going to struggle then with trying to find new sources of supply and be efficient at making profitable gasoline and other products?
So most of the time, a rising oil price is not good for refiners. They usually see their margins get eroded whenever oil prices are rising. They can't quite keep the price increases up with the price increase of oil. So you will often see margins erode, but when prices start to fall, that's when the refiners will start to make their money. We always called it rockets and feathers in the refining industry. Oil prices shoot up like a rocket, and then gasoline prices go down like a feather. And that's because once prices start to fall, people don't become, they're not too worried about shopping all over town for the best deal. They're just happy that prices are down. And so that's when you'll see the refiners make more money, when prices finally start to retreat.
And the oil refiners in the Gulf of Mexico area used to love to import the Venezuelan heavy sour crude, but that's not an option right now. So they used to buy the cheaper Venezuelan heavy sour crude and they used to upgrade it. It was very viscous and energy dense, and they can make it into a lot of different products. And the input cost of that type of heavier oil was cheaper. So they upgraded their refineries years ago, and then now they can't import that type of oil that's cheap anymore.
Right. And they're big users of Russian crude. So they will be scrambling to replace that. There'll be a little bit of a disruption. Some of the products mix may get disrupted. You may see a little bit of a shortage on diesel or a little bit of shortage on gasoline as the product slate gets disrupted. But after a while, it'll settle down. The flows will get rerouted around the world, and this will settle down.
And those pipeline companies you mentioned, are those all master limited partnerships still, or did they all transition to C Corps? Because I know when I was working at Investing Daily with you, there was big issues with that, and the shares were some of them, Kinder Morgan especially, were starting to crash as the transitions were occurring from master limited partnerships back to C Corps. Are those already priced in?
Yeah, Kinder Morgan is a corporation now. Enterprise Products and Magellan Midstream are still MLPs. Enterprise Products says, hey, it's working for us. The model's working for us. We're going to stick with it. I think if they would convert to a corporation, I think they'd see a very nice premium on their stock after they convert. And I wish they would. I sell covered calls on all of my holdings except a handful, and I won't do it for Enterprise Products because number one, the yield is 8%, and I don't want that to get called away. But the other is, if they ever announced they were converting to a corporation, they could see a 20 or 30% pop in the share price in very short order.
After maybe a crash where potentially people sell it, because that's what happened with Kinder Morgan. Or do you think the reverse would happen this time? Because when Kinder switched, the stock, I think, crashed. This was 2013 or 2014, if I remember correctly. It crashed like 40%, and then it took a while for the shares to recover. Yeah,
Kinder Morgan converted because they were having some serious issues. I mean, they pretty much tapped that model out, and they had to make that conversion. If you look more recently, companies that have made the switch from partnerships to corporations, and I've seen some companies split their stock, and they'll go. They have a corporate offering, and then they have an MLP offering. The corporate offering outperforms the MLP offering. And I think that's what you would see with Enterprise Products. If they ever gave me a choice, I would opt for stock instead of units.
Oh, the taxes on a regular C Corp are much easier. It's easier to buy and trade the shares on a E-Trade account or an online brokerage account too.
That's the other thing, and it's an important thing that you just brought up. A lot of people don't want to invest in an MLP. So if you convert to a corporation, there's just a larger pool of demand of people who will buy a stock over those that will buy a unit, an MLP. And so that's what you see. When some of these companies like Brookfield, when they split and had shares and they had units, and I ended up with both, and my shares outperform my units dramatically. And they're the same. I mean, you own the same piece. It's taxed differently, and there's a different pool of investors.
And a lot of CPAs who are doing people's regular taxes for regular stocks, they don't want to have to handle the K1s for MLPs. It's easier for some CPAs, but the CPA I've been using for years, when I owned some MLP shares and my dad owned some, he was talking about how difficult it was to deal with because he hadn't done it before, and it's not normal stock brokerage trading stuff.
Yeah.
Well, Robert, I've really enjoyed our discussion on oil, natural gas, and a little bit on uranium. If my listeners want to follow your work more closely, read your excellent Forbes articles, or take a look at your paid newsletter, how do they do so?
Yeah, I always tell people just Google my name and you will find me. So I write at least 5 Forbes articles a month. I've written that many this week already because of all the interest right now. Investing Daily, I write 2 subscription columns for them. We've got Utility Forecaster. We've got more than 22,000 subscribers there and growing. People are very happy with that service. We cover income investments, cover oil and gas, cover national limited partnerships, and all utilities and all income sectors. And then I have a covered call newsletter there. And then I've got I write a free column for them every week. So every Tuesday on their homepage, there's some general, investment advice or general personal finance advice column that is there. And that's primarily where you'll find me, Investing Daily and Forbes.
Great. Well, thank you very much for your time. And my listeners should definitely check out Robert's free articles over on Investing Daily and Forbes. You are truly a world-class oil and natural gas expert. I've learned a lot from you over the years, and I will definitely re-listen to this interview to pick up additional tidbits.
Thanks, Jason.